everyone. Thanks for listening in on this episode of InvestSmart, Market Insights and Insurance Tips with Bright Investor. This morning, I've got Donato Callahan on, and we're going to be highlighting his expertise in market analysis, investment strategy, and the critical role of insurance and investment decisions. So Donato, I appreciate you joining this morning, and would like just a brief background on kind of your history in Bright Investor and how we got here today.
Yeah, well, thank you so much for having me. A little bit about my background. Went to school for biology, which was a fun process. Took me across the world to South Africa, West Montana, and until my senior year of college, I tried to get into real estate. And so I spent my entire last year of college learning the business, getting into it, and finding the problem that comes with trying to invest in real estate in other markets when you don't live there. And that basically kickstarted the issue of how do you find good information to invest in real estate with confidence anywhere in the U.S., even if it's 1,000 miles away. And that started the journey of becoming Bright Investor. And so I have put 2 years of Bright Investor build up and development into play to create what we have now today, helping people spot the best markets and the best deals across the country, leveraging the power of market research. And I use it in my day-to-day investing as I invest in both residential and commercial multifamily real estate. And actually, as of next week of this recording being launched, I'll close on my next 200-unit deal, bringing me up to about a $36 million portfolio. And I'm 24, so the age 24.
Wow, that's a really interesting story and background and pretty unique. So, well, Donato, I appreciate that background. So, would you mind explaining the concept of market insights and its importance for investors?
Absolutely. I mean, one of the golden rules of real estate for a long time has been location, location, location. And it's really easy to communicate when you ask someone, why is a single family house in Southern California that used to be, $50,000 back in the 70s is now $1.2 million today? And the answer is, well, it's because it's Southern California. Not because the person did the most rehab or the most repairs or has the most unique floor plan, because of where they bought it. And the same can be said for if I tell you I have an amazing property, it's a 3-bedroom, 2-bath house, 10,000 square feet, for only $10,000, and it's right outside of Flint, Michigan, or outside of Detroit, Michigan, or certain areas across certain cities maybe that are having issues with crime or lower income or not having strong demographics. It doesn't matter how cheap or affordable the property is, you're going to have second thoughts before you invest there because you have concerns about potentially the location. And so when it comes to market insights, the power of it is saying if you're going to make a choice to invest in real estate, how can you buy a property with the utmost confidence that the street, neighborhood, zip code, and city that you're planting that seed in is going to grow into a successful investment without having to worry about it or lose sleep at night?
That's super interesting. So would you mind, kind of piggybacking on that part, so kind of getting more into that. So help identify profitable investment opportunities and kind of the key factors that drive market attractiveness, kind of what you're getting at as far as different markets.
Absolutely. So I boil this down to a simple framework called recap. So if you're looking at a market or a property, do a recap, which is an acronym that stands for rent, employment, crime, appreciation, and population. These are the great 5 quick things to look at when looking at a deal or a market to help know if it's going in the right direction for you. And I'll break that down piece by piece. So for rents, ideally you want to get into an area where whenever you're done renovating a property or you choose what your rents need to be to make your investment successful, that should be no more than 1/3 of the local income. Way too often people will buy a property and say, I can rent this out for $1,500 when I'm done, cash flow. And by the time they do their renovations and they've poured thousands of dollars into this investment, the actual demographic of the folks living nearby, they don't have the income to support the rents that landlord needs in order to cash flow. So there's a mismatch between what the local community was demanding and what they provided. So checking your rents and making sure they're going up over time, or at least not falling, is critical because appreciation is what we all like to see those big checks for. But without cash flow month over month, you're going to be paying quite a large sum over the years just to keep that property afloat.
Absolutely. A wise man once told me you can't take margin to the bank. It's
Yeah.
a nice concept, but it's not cold hard cash. So that's really interesting. So hey, we're in the insurance industry. We're talking about the insurance as a subject. So would you mind going a little bit more into, kind of how insurance is a little bit more of a cornerstone of smart investing?
Absolutely. So many places across the US right now are having issues with insurance, where properties either make sense or they don't make sense, largely based on the insurance costs. And with the replacement value of properties continuing to go higher and higher and higher over time, it is absolutely critical to have the right level of insurance for yourself as an investor to really safeguard against a lot of the things that could be happening, whether that is environmental, if you're living like in a coastal area, whether it be fire-based, or whether it be tenant-induced damage or things like normal wear and tear. You have to be able to get into a property that's going to cash flow while still providing the level of insurance that is going to insulate you from some of those uncontrollables. So a lot of things that I do on a day-to-day basis is when I'm looking into an area that I want to invest in is I'll get insurance comps, or I'll contact a group just like yours and say, what is this insurance going to cost me in this area? And it's critical because I buy multifamily deals, and the difference in insurance could be from one city, for example, it's $500 per unit for our insurance costs. And on another market a few hundred miles away, it can be $1,200 a month for insurance. On the residential side, it can vary by hundreds of dollars per month as well. So it's super important when you're getting into an area to understand what insurance costs are going to be and what level of coverage you're going to get, because that is a direct impact on your bottom line as an investor every single month that cannot be ignored. So having great partners like Steadily is crucial to be able to get into a deal and get that insurance quote and be able to know that your property is protected, bottom line is protected, and you're not at risk.
Yeah, the end goal is that we want to get quality coverage at a competitive price point, but that you're hitting the nail on the head as far as with the insurance, as far as basically risk management, as far as with the investments, and it's kind of like a safeguard in that aspect. So Donato, would you mind going a little bit more into like sharing your approach to how you kind of analyze market trends and identify like high potential investment areas?
Yeah, absolutely. So on one side, I can say, well, you just made a cheat code for this. Bright Investor's newest version, as of recording this video in middle of April, we have just released a new market finder tool. So you can simply state, show me the top markets in Georgia for appreciation. And it'll just tell you, here are the top markets that are doing the best for appreciation. So you can just find markets that way. Beyond that, if you don't have access to Bright Investor yet, or you like doing hard work for the sake of doing hard work, I will typically use that recap framework. So I'm going to look for areas I can invest in where the rents are less than 1/3 of the local income. Then I'm going to look at the employment and get an idea of the job market. And my rule of thumb for the job market is to see 10% growth over a 10-year period. And specifically, I want to see jobs that are coming to a city that are in specific industries like education, healthcare, government, and professional services, because they are recession resistant and they're less susceptible to a lot of volatility that other markets can get exposed to, like the oil and gas industry. Then I'll look at things like crime to see what the prevalence of violent and property crime is around my particular address. And Bright Investor actually offers a crime heat map around every property, so you have that on a street-by-street level. And then I'll look at things like appreciation to find not just cities, but also zip codes within cities that have been appreciating at least 2% per year, and avoid areas that have been losing value for a period of 2 years or more. Because I really don't want to buy into an area where I'm going to pay $200,000 for a property and it's losing $10,000 to $20,000 a year in value. That's not the way to make money in real estate over the long term. Lastly, I'll look at a population as my quick review for recap. And again, my rule of thumb here is 10% growth over 10 years. Because at the end of the day, real estate is not a product business. It's a service business. And as landlords providing rentals, we need to provide services to our customers. So the more customers there are in an area, i.e. the higher the population growth, the more demand for our service, higher rents we can charge, the less risk, the less vacancy, and overall a more successful investment. So I want to find areas with a lot of customers and put that all together to do my market recap on finding areas that I want to invest in.
Wow. So Bright Investor kind of brings in like the economic, the demographic, and industry trends that kind of help like point in science, like profitable investment opportunity areas, if I'm kind of understanding a little correctly.
Absolutely. I mean, with Bright Investor, with the market comparison tool, click a button and it's going to give you the leaderboard. So here are the top markets in every state across the country. And once you find one you're interested in, you can look at the entire city and break it apart piece by piece for where the best areas in that city are. And then lastly, we actually just launched our MLS access and off-market property access. So once you find an area you're interested in looking in, you can actually find deals for sale and estimate the rents and the cash flow on a monthly basis. And then with partnerships, get instant insurance quotes on what that property is going to look like. So you can take the whole process of I have no idea where you want to invest to having a locked in city, zip code, street, and multiple cash flowing deals that you can start calling in minutes.
That's awesome. Wow. So kind of transitioning, would you mind going a little bit of a deep dive into like how insurance considerations influence investment decisions? And then a little bit on top of that, kind of how leveraging insurance insights to enhance investment strategies and mitigate risks, like how insurance could, play a role in whether you purchase property or looking in an area of a city. And then if so, when you do purchase that property, like what are some ways that you could kind of mitigate some stuff?
Yeah, so absolutely when I'm looking at certain parts of the city, I'm taking a good example of a market like San Antonio versus Houston, Texas. So Houston, Texas, over the last maybe 3 years, has seen some pretty significant environmental issues that come through flooding or tsunamis, or not tsunamis, but flooding or hurricanes, and that has had significant impact on the insurance premium markets. So where previously I might look at areas to invest in real estate all along the coast on Houston, more the south and eastern portions of the city, now it becomes very difficult to pencil anything that's not on at least the northern part of Houston, if not markets that are more inland like San Antonio. So I will look at insurance premiums and not just what the current monthly rate is, but get an idea of what insurance has been over the past few years and how rates or quotes are increasing or decreasing in certain markets. That is a huge component of choosing where to invest in real estate, because you can be sure of a couple things in life, right? Death and taxes are two of the most famous examples. You can also be sure that insurance over time will be going up as well. And so that is a crucial number that you have to be able to get in on. And not just the number of the insurance that you're paying for, but knowing what the company you're working with, what are they going to do in those situations when it comes to having to file a claim, what the kind of service you're going to get, are they easy to work with, and what can you expect in your partnership with that company to protect your property. So it's impossible really to buy a property today, I would say, in the Sunbelt region of the United States without completely dialing in what your insurance costs are going to be. And you need a way to get that fast, reliably, and from a provider that you know can actually close that policy and work with you as an investor. Because without it, you're just kind of flying blind. And at least in my world, when you're raising money from investors, it's not an option to not have great insurance. And you have to be able to match up a great property with a great part of town with the insurance package that you can afford that also provides the coverage you need.
Absolutely. You hit the nail on the head. It's so important these days. We've seen in the same market 50% year over year increases in premium prices. And that's just the nature of extreme natural weather events that are happening in the country these days, and everything that's going on with that. So that's just the likelihood of this investment strategy isn't going to be going away anytime soon, where insurance is a bit more than just a regular old line item on that investment strategy. Now it's definitely something that's a static number, and you're always going to be wanting to evaluate that number as tightly as possible, as far as potential future increases as well in a market. So that's definitely something to consider. Could you share some resources and tools that can aid investors in their market analysis and understanding of insurance implications?
Yeah, so one, I would highly recommend going to folks like yourself on Steadily. So if you have a property that you're looking to invest in, you guys have instant widgets and instant estimate calculators, which can be super useful to get an idea of, hey, this is my property and this part of, I'm going to say, Des Moines, Iowa, and I want to get an idea what my monthly premium is going to be to cover this asset, what kind of replacement costs, what my coverages are. So highly recommend going to folks like yourself. I know there's a variety of resources out there that can help provide those different insurance estimates that can really help you get an idea of what your insurance is going to be before you close on a property, which is crucial. On the market analysis side, there are a lot of websites you can go to get an idea of what kind of information you're going to need to choose a good area to invest in. Of course, my favorite is Bright Investor. It's the reason that I built it. It is something that truly I'm trying to build something here that's not just the best option, but truly the only option, because you can get stuff on our platform that you can't get anywhere else. And when you pair up the amazing top level market research with the deals you can find, and then you bring in partners like yourself and others who have the insurance information, it just makes it super actionable to say, here's a deal I want, and I know here's a policy I want, 2 clicks of a button, good to go. And that's how you can really quickly start comparing which areas and properties are going to work the best for you without having to spend all the time calling different providers or having to, go through all the different policies or, read through all this documentation that really slows down your acquisition process.
So aside from Bright Investor, because we know that that's a super useful tool for investing and kind of learning about that investing world, what would you say are some like essential readings, platforms, or like tools for aspiring investors?
Sure. So I would first recommend, if they're not on BiggerPockets community, they should be. It is too much free, valuable education to learn how to do real estate investing, get introduced to a lot of strategies that you just need to be leveraging it. Second, there are a variety of paid mentorship or coaching programs that I got started in, and a lot of the folks who I know are the most successful in real estate went through at least some type of training program, whether that be through folks that I know, like BiggerPockets boot camps, or other folks in the space that specialize in specific niches of real estate. Having something that can just expedite your journey can be really useful. And then lastly, I would read a ton of books. So there's the Jay Scott's book on estimating rehab values. There's, as far as running a business in the real estate side, highly recommend the book Traction. And then getting a little philosophical here, I'd really recommend people read Simon Sinek's Start With Why and Sullivan's Who Not How. Because a lot of folks will get into this game of real estate investing and looking to get really caught up in the numbers, which they should. Okay, what's my mortgage going to be? What's my insurance going to be? What are my taxes going to be? And what's my cash flow? But I really urge people to ask the question, why are you even getting into this industry? What's the purpose of it? Is it to build a flipping business? Okay, then great. Or is it to have some money that's coming in from you every single month passively through rentals? Okay, great. Define what your ideal end state is, and then work backwards from that to look at what kind of business you want to be getting into. And that's the exact reason that I went from one 4-family house hack to a 176 unit building, my first deal, my second deal. So I thought, you know what, I don't want to do that stuff in the middle. I know what my end goal is. So let me just skip that middle stuff and go right to the big stuff, because that was what worked for me. And other people, through no fault of their own, they'll take 15 to 20 years to work through that process to arrive at the big stuff, because maybe they got into the business to start making money and they didn't have as much long-term foresight on what it is they're really trying to build. So books like Traction and Start With Why and Who Not How are great books to really start that conversation of, what are you really doing all this for? And then when you leverage either mentorship groups or free education on BiggerPockets, for example, that's how you can really start executing on these plans, and then working with all the different vendors like your guys' platform to start putting things into action to make real estate happen.
Could you discuss some common mistakes investors make in market analysis and insurance planning?
Yeah, so I'd say first off, the golden rule of real estate is location, location, location for a reason. Where you buy matters almost as much, if not way more, than what you're buying. And it can impact you both really well and really negatively if you buy blind. Second, a great way to check out a property or a market is to use the recap framework. So check the local rents, employment, crime, appreciation, and population before you invest. And then using platforms like Steadily and other insurance avenues to get your policies written is a great way to be able to make sure you're getting into a property with lower risk before you go to the closing table. And lastly, if you're going to get into the real estate investing industry in this business, read books that talk about why you're doing this whole process before you start looking into how to do it, so that you know that you're actually on the right road to where you're trying to go in your life and in your career before you start playing all these bricks down. Because you might end up finding that in 10 or 15 years, you built an amazing path to a destination you didn't want to be at. So put all that together, and that's how you're going to be able to be successful in finding the right markets, investing in the right deals, being protected with the right insurance, and then building something into a life that you actually want to have.
Amazing stuff, Donato. I really appreciate your time this morning. Everybody, you should go check out Bright Investor at his website. We're going to put some information down below for you guys to be able to share on his site. I want to thank you again for your invaluable insights and contributions on this call. And then I want to remind everybody that we can find more information, resources, and episodes of InvestSmart on Steadily.com. I appreciate everyone for listening this morning.
Thanks for having me.